In a world increasingly shaped by cryptocurrency, recent developments have sparked significant changes in the market. From new technologies in decentralized finance to institutional trading innovations, the landscape is evolving rapidly. Here are today's top 10 stories you need to know. The cryptocurrency community is actively embracing new innovations that enhance the functionality and accessibility of digital assets. From decentralized applications to new trading platforms, the focus is on improving user experience. These innovations reflect a broader trend towards creating more user-friendly environments in the DeFi space. As the market continues to evolve, developers are working tirelessly to introduce features that cater to both novice and experienced users. The emphasis on innovation is essential for sustaining interest and engagement in the cryptocurrency sector. As new technologies emerge, they have the potential to attract a wider audience and facilitate greater adoption. The ongoing commitment to enhancing the crypto ecosystem will play a critical role in shaping its future. Looking ahead, we can expect to see continued advancements that push the boundaries of what is possible in the digital asset space. Market sentiment in the cryptocurrency space remains cautious as investors navigate ongoing uncertainties. The recent fluctuations in prices and trends have led many to adopt a wait-and-see approach. This caution is driven by various factors, including regulatory developments, market volatility, and economic conditions. As traders assess the risks involved, sentiment analysis indicates a prevailing sense of apprehension. Many investors are seeking safe havens and diversifying their portfolios to mitigate potential losses. Understanding market sentiment is essential for making informed trading decisions in this environment. The cautious approach may lead to a slowdown in trading activity, impacting liquidity in the market. Observing shifts in sentiment and their effects on trading volumes will be crucial in the coming weeks. As the market stabilizes, we may see a shift in sentiment that could influence future price movements. Recent regulatory changes are beginning to impact the cryptocurrency landscape significantly. Governments worldwide are increasingly focusing on establishing frameworks that govern digital assets. These regulations aim to provide clarity and security for investors while fostering innovation within the sector. However, the implications of these changes are complex, as they can either encourage or hinder the growth of the cryptocurrency market. Industry leaders are advocating for balanced regulations that promote innovation while ensuring consumer protection. As regulatory landscapes evolve, market participants must adapt to comply with new requirements. The ongoing discussions and developments in this area will play a crucial role in shaping the future of cryptocurrency. Observing how various jurisdictions implement these regulations will be vital for understanding their long-term effects on the market. The coming months will reveal the extent to which these regulatory changes influence investment and trading behavior. Interest in cryptocurrency among institutional investors is growing as more firms explore decentralized finance opportunities. This surge is indicative of a broader acceptance of digital assets within traditional finance circles, driven by a desire for diversification and yield in a low-interest rate environment. Institutions are increasingly recognizing the potential of blockchain technology to streamline operations and enhance investment strategies. Services such as on-chain execution and tokenized assets are becoming particularly attractive, offering new avenues for liquidity and efficiency. As institutional engagement deepens, the demand for robust infrastructure and security measures will become paramount, prompting firms to invest heavily in cutting-edge technology and strategic partnerships. This shift may lead to innovative products tailored specifically for institutional investors, fostering greater participation in the crypto space. Analysts predict that as institutions adapt to this evolving landscape, the cryptocurrency market will continue to mature, presenting unique opportunities and challenges. The next year could be pivotal in defining how institutional strategies will shape the future of digital assets. The cryptocurrency market is currently experiencing increased volatility, marked by significant fluctuations in asset prices. This turbulence has left investors grappling with uncertainty as rapid shifts in market dynamics unfold. While volatility is a hallmark of the crypto space, The current situation has raised alarm bells among traders and analysts. Key factors behind this unrest include recent regulatory developments, which have created a cloud of uncertainty, alongside changing market sentiment and macroeconomic trends impacting investor confidence. As trading volumes fluctuate, the behavior of major cryptocurrencies like Bitcoin and Ethereum remains crucial, often serving as barometers for market health. This heightened volatility not only affects individual investors, but also poses risks to institutional players who may be reevaluating their exposure to digital assets. Looking ahead, it will be imperative for investors to remain vigilant and adaptable. Analysts suggest that the coming weeks will be critical in determining whether the market finds a path to stabilization or if it plunges deeper into chaos. AlphaPepe has launched early access to its AlphaSwap platform, allowing users to trade selected pairs across Ethereum and Binance Smart Chain. This development highlights the project's commitment to enhancing user experience in the crypto trading space. The rollout of AlphaSwap is seen as a strategic move aimed at positioning AlphaPepe favorably within the competitive landscape of decentralized exchanges. With Bitcoin price predictions eyeing $250,000, the timing of this launch is crucial, as traders seek innovative platforms to navigate the volatile market. The early access phase will enable users to test the platform's features and provide valuable feedback ahead of the official launch. Such initiatives reflect the growing importance of user-centric design in DeFi applications. As AlphaPepe continues to develop its offerings, it will be interesting to see how it adapts to the needs of its users and the evolving market conditions. The crypto community will be watching closely as AlphaSwap prepares for its full launch. The tokenized real-world asset market has reached a remarkable milestone, hitting a record capitalization of $28.9 billion in May. This impressive growth underscores the rapid acceptance and adoption of blockchain-based financial products, particularly among institutional investors who are increasingly seeking innovative investment opportunities. Notably, the market for tokenized treasuries has surged to $16.2 billion, reflecting a strong demand for secure digital versions of government debt. Additionally, tokenized equities have experienced a 20.4% increase, now valued at $2.41 billion, showcasing the potential for traditional stocks to enter the digital realm. This shift highlights the expanding role of tokenization in bridging traditional finance with digital assets, making investments more accessible. As the number of crypto accounts surpasses 14 million, it is evident that mainstream adoption of these financial products is gaining traction. Moving forward, we can expect further advancements in tokenization technologies, which could significantly reshape the investment landscape, enhance liquidity, and offer new opportunities for both retail and institutional investors alike. Recent market analysis indicates that Bitcoin and Ethereum are experiencing pronounced bearish trends, with both cryptocurrencies displaying signs of weakness. Bitcoin has notably broken its short-term support levels, reinforcing a negative outlook for the leading digital asset. Ethereum's performance, closely tied to Bitcoin's movements, exhibits a similar bearish structure, raising concerns among investors. This downturn occurs in the context of increased institutional adoption of tokenized assets, highlighting a complex relationship between traditional finance and the cryptocurrency market. While some analysts point to short-term bullish divergences, the overall sentiment remains grim, with many cautioning against potential further declines. The impact of these trends is significant, as they could deter new investors and shake the confidence of existing ones, ultimately influencing market liquidity. Additionally, regulatory developments may further complicate the landscape as authorities seek to impose stricter controls on digital currencies. As the market evolves, it is critical to monitor these trends closely. In the coming weeks, Bitcoin and Ethereum must demonstrate resilience to recover, or risk deepening the bearish trend and facing more significant challenges ahead. Orbs has officially launched its innovative offering, Orbs Institutional, which aims to transform on-chain trading specifically for institutional players. This advanced Layer 3 blockchain infrastructure allows trading desks, OTC firms, and custodians to access robust on-chain execution capabilities directly. By enhancing the trading experience through competitive pricing and improved transparency, Orbs is positioning itself as a key player in the evolving landscape of decentralized finance. This launch comes at a pivotal moment when institutional adoption of DeFi is accelerating, driven by the need for more efficient trading solutions. Orbs Liquidity Hub plays a crucial role by aggregating liquidity from various decentralized exchanges, thereby minimizing the risk of front-running during trades. As more institutional players engage with blockchain technology, the demand for reliable trading solutions is projected to increase significantly. This shift not only signifies a maturation of the DeFi space, but also highlights the growing importance of infrastructure that caters to institutional needs. Looking ahead, Orbs aims to refine its technology further and expand its offerings to better support institutional trading operations, potentially setting new standards for efficient. Sperax has unveiled Sperax OS, an innovative AI agent workspace designed specifically for decentralized finance. This launch, which has been 7 years in the making, represents a significant milestone in the evolution of blockchain technology. Sperax OS aims to facilitate a more efficient and accessible way for users to interact with DeFi applications, addressing the complexities that often deter newcomers. The platform builds on Sperax's previous successes, including the introduction of USDs, the first auto-yield stablecoin, which garnered attention for its unique approach to stablecoin functionality. With the growing demand for automated financial solutions, Sperax OS is expected to enhance user engagement and streamline various DeFi processes, making them more intuitive. Institutional players have shown increasing interest in DeFi, further validated by this launch, which positions Sperax as a leader in the space. The open-source nature of Sperax OS will allow developers to contribute to its evolution, potentially leading to groundbreaking advancements in the DeFi ecosystem. As more users and institutions adopt these technologies, we could see a significant shift in how financial services operate globally. Looking ahead, Sperax aims to leverage this technology not only to enhance user experience, but also to expand its market presence, ultimately transforming the landscape of decentralized finance and attracting a broader audience. Thank you for watching today's top stories in cryptocurrency. Which story surprised you the most? Don't forget to like and subscribe for more updates.